On today's show, why advisors should take the comprehensive business planning approach. Part one of this week's series on business owner and executive solutions with Principal's Regional Vice President, Sherry Flint. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Innsmart. Let's get down to business. Well, welcome to the show, Sherry.
Thank you very much.
Welcome back, I should say, because you did your whole week series on deferred comp, which was, by the way, excellent. If you haven't seen it, just go out to our archives. Really a great show. This is kind of strange because I don't ordinarily have a carrier specific for a whole week, but every time I've done business planning, it's either been business succession, it's either been business executive benefits, LTC, DI, maybe retirement income, or small family businesses that are affecting their estate plan. We usually kind of piecemeal all this. What the principal has done here, and I want you to, this is why we're going to spend a whole week on this comprehensive approach really brings everything together. I've never seen, to my knowledge, in my 30 years, I've never seen a carrier or anyone planning strategy or even software that we use. Well, I've never seen them actually dovetail everything together and integrate it. So when we're talking about it, and you guys call this the BOWS, I want you to talk about the acronym and how long has this been on the street, and talk a little bit about the general approach, because this is kind of new for a lot of people that are in the business market.
Absolutely. So BOWS stands for Business Owner and Executive Solutions. Our platform's been around for over 30 years, and it's really an industry-leading platform of tools and resources designed to help advisors succeed in the business marketplace. Our approach really is to focus on the 6 areas of business planning that are important to business owners. And you can see it's everything from business protection, supplemental retirement, exit planning, estate planning, survivor income, and income protection. In each of these sections, we have specific tools and resources for different size businesses, different structures, depending on their strategy. And so it's a platform of tools and resources that goes deep and broad in this category.
Now, when we're talking about this now, because it's all integrated, but you have standalone pieces, materials, support mechanisms, right? I mean, brochures, PowerPoints, whatever.
Absolutely.
Now, and that is going to be accessed through whatever brokerage channel you're using. And this is huge because this isn't something that the actual consumer can go direct to Principal and get. Isn't that correct?
That's correct.
So this is why they're using, I think this is another area where we're seeing another carrier actually be very proactive about using our channel as their evangelistic tool and their recruiting tool for their ideas. This is really a really cool idea. Why don't you walk me through, in your estimation, I don't know if there's any priority to this, why don't you give me give me the roundabout. Let's go around and talk, just give me a little bit of each.
Well, let's start with succession planning. So oftentimes we're working with business owners and their business is their largest asset. And oftentimes understanding the value of the asset and the role that's going to play in their exit strategy is really important. So often we start with business protection, that buy-sell agreement, making sure that we have a legal document in place that outlines when and how the business owner will exit the business. So that is oftentimes a good start. Once we figure out the value of the business and the role it's going to play, oftentimes that leads us to supplemental retirement plans. Does the owner need to save over and above the 401k limit? Do they have key employees they need to attract and retain? And so we kind of go around there. Income protection is another big one. Most business owners that we work with have key employees that they can't live without. They're critical to the ongoing operation of the business. So key person insurance is a big part of this. What happens is, oftentimes we have to help the business owner prioritize. So we actually have a priority checklist that we often use. It says, here's the 6 things we can focus on. What's the one that keeps you up at night and where do you want to start? And so all of these are very, very important, and oftentimes we're not really sure where it's going to lead when we start those conversations with business owners.
Well, now when you're talking about, because I'm trying to think, wow, is comprehensive planning just so deep I can't focus because it's so broad, it's so, it's so comprehensive. But really the way you've broken it down, it seems like a 6-7 step program, like I'm going through kind of a small chronology. When I'm looking at that, I kind of think that this would be really good for fiduciary market too. I mean, CPAs must go crazy over stuff like this.
This goes over very well with CPAs, so centers of influence, attorneys, as well as banks, right? Because banks oftentimes loan business owners money and they need to protect against the loss of those loans.
When you see this application now, we've been doing this for a little while, they all have standalone support material. If I'm beginning and I'm saying, hey, I've been in the business area, but I've been just doing 401ks. How would I segue from, if I'm already in business and I'm segueing into this full comprehensive idea?
That's a great question. This platform is really designed to be used for people that have no experience in the business marketplace. We have a complete set of tools and resources, sales folks, advanced sales attorneys, basically all the tools and resources and the knowledge you need to expand in this practice. Oftentimes we approach business owners with our business valuation tool. That is one of the popular tools that I'm going to talk about in this afternoon segment. And really what we use is that we explain to the business owner that business planning is an important part of their succession strategy. Let's get started.
Now, when I'm looking at this from a point of view, I said, well, if a person's already in a 401k, I can kind of go and do a segue into one of these next programs. And you just said, I thought I just heard you say, I could start from a drop dead. I've never been in the business market at all. I'd love to know how to do that. And you have entry-level instructional issues on this?
Absolutely.
So if I'm completely naive in the business market, what would you recommend before we go to the break? What would you recommend? What segment would I start out with? If I'm a newbie and this is brand new to me as an advisor, which one would I go with first?
I start with business protection, although, key person insurance is a good one to start too, because everybody needs key person insurance, and we're going to focus on that. I like to start with approaching business owners and asking them if they have an existing buy-sell agreement. And when their eyes light up and they say, what's a buy-sell agreement? I know they haven't done any business planning. And so often there I'll start with an informal complimentary valuation. Let's peg the value of the business, and then let's start thinking through what would happen if you were sick or hurt and couldn't come to work tomorrow. What would happen if you got hit by a bus and couldn't come to work tomorrow? What would happen if you decided you wanted to retire tomorrow? Who's going to make sure that there's a succession plan in place to make sure that your family and your heirs are taken care of? So I like to start with the business planning because I do think that's a good foundation of most business planning, so the buy-sell agreements.
Well, that sounds like to me an invitation. If you haven't really tried business and you say, I'd like to try the business market, try to penetrate it, they have really good resources to do that, and that'd be a great start. When we come back from the break, I want to talk about business valuation because this is one of those things where this is kind of your flagship area in this whole comprehensive approach, and we'll talk about it when we come back. It's not how much money you make for your clients, it's how much money they get to keep, especially in retirement. But retirement income could cause Social Security benefits to be taxed. One tax advantage alternative is life insurance designed as a non-modified endowment contract that can generate tax-free income without taxing Social Security benefits. These contracts offer differing funding options depending upon your client's risk tolerance. For more information on how life insurance can be part of your retirement planning, just email me at steve@downtobusiness.tv. Brought to you by Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment. Of course, I'm with Sherry Flint. Sherry, you're talking about business valuation. We're talking in the bigger idea here is this whole comprehensive issue. This is a huge place to start. Business valuation. I'm just trying to be the newbie for a moment. It seems so overwhelming. I got to figure out the business. I mean, my business owner doesn't even know what they're worth. How am I going to come to that determination and help them do that?
You know what, that's a very good point. Most business owners don't know the value of their business. They either think it's worth a lot more, or sometimes they actually come in a lot lower than their actual business is worth. And what's important is understanding the value of the business and what role that's going to play in their exit strategy. And so what we want to do is use a valuation as a starting point for discussions with tax and legal advisors. So what we're going to do is an informal business valuation, and this is a service that we provide at Principal. We have 12 attorneys, CPAs, and consultants on staff, and they have years of experience, and they actually do the valuations in-house.
Okay, so really what I'm using then, if I'm hearing you correctly, is I just need to be the data collector.
Correct.
So we have some forms, and does it really matter if it's an S Corp, a C Corp, an LLC, partnership? Does it matter? You
know, it works really well for most types of businesses. So S Corp, C Corps, LLCs, partnerships. I do tend to stay away from smaller sole proprietors. What we're looking for are 3 years of tax returns and financial statements. What we're looking for are companies that have been around for a while, that have good cash flow, minimum of $500,000 of revenue. And one of the important things I like to look for are we want to make sure that the owners are paying themselves. They need to be taking out $150,000, $125,000 a year. We want to make sure that they have money to implement some of the recommendations we're going to make.
Now, when you bring this evaluation, you just gave me the minimum requirements as you're looking. It's not that it's a requirement, but that's where it works really well. That sounds like your threshold.
That's our threshold.
And so how long would it take me to go through? If I've never done a data collector. Let's say I'm in front of it, I have a qualified client. I get in front of, how long is it going to take me to get through this data collector if my client has all that information?
It's simple and easy. As a matter of fact, here's our one-page fact finder. Well, I guess technically it's a two-page fact finder. The front page is really a script to help the advisor walk the business owner through that conversation. You'll see step one is, do you know the value of your business? And if the answer is no, let's talk about why that's important, and then we'll offer them a complimentary informal business valuation. If the answer is yes, we ask them, do you have a buy-sell agreement? So that's the script the advisor uses to walk the client through that business planning discussion.
And can the advisor say, the team behind me are fully functional fiduciaries? I mean, CPAs, attorneys.
They are professionals. They're attorneys, CPAs, and consultants that have expertise
And we're
specifically
doing
in the
this
business marketplace.
complimentary evaluation, whether they go forward or not.
Complimentary.
Okay, very good.
And so from there, you'll see there's a 12-question questionnaire. And we're looking for name of company, corporate structure, how many business owners. And you're going to fill that in and send that to your distribution partner. And from there, within 5 to 7 business days, we'll actually provide an informal business valuation. What's important about the informal business valuations is it comes to the advisor and their partner they're working with, and there'll actually be a list of sales opportunities. And from there, we schedule a call with the person that did the review. We'll talk about the findings, we'll talk about the valuation, which method is going to be most appropriate for the business, and how do we use that as a jumping off point for next steps. So we want to make sure the advisor knows where to go from here and that we're setting them up properly for their next appointment.
Okay, Sherry, I want to make sure I heard you right. I thought I heard you say 5 to 7 day business day turnaround.
Correct.
That's really quite expeditious.
Fabulous.
I mean, that's fast. And then the second part is you're going to hop on with the advisor and walk through it, and you are including in the business valuation a summary statement of sales opportunities or product opportunities or strategies.
That's exactly right. It's going to come along with it. So for example, let me show you a sample of our business valuation. So here's what a typical proposal would look like. And again, we're going to use the 3 years of financials or 3 years of tax returns. We're going to prepare a customized report. And we're going to go through the 5 methods typically used by the IRS. Our team is going to make a recommendation on which 1 or 2 seem to be the most appropriate for the business based on their industry. It could be, it's not necessarily the highest, but let's say it's straight capitalization. That business was worth $6 million. So from there, we talk about what went into the valuation. Is it higher or lower than the business owner thought? How are we going to open that conversation? But along with this proposal, there's going to be a list of sales opportunities. So consider key person insurance. Consider a cross-purchase buy-sell. And there'll be a 1-pager that explains what is that concept and how does it work. And then from there, we can decide, do you need that attorney or CPA on the phone with you when you go to meet with the client to explain the valuation and some of the concepts? Do you need proposals? Do you need illustrations? What do you need to get ready for that first appointment? So again, we talked about providing support before, during, and after the sale. This is the before and the during.
Have you seen in your experience, you've been in this for a long time, 20-something years, have you seen any one evaluation method trump any of the other ones? Is book value higher than straight capitalization? Or no, they're all different?
Book value really isn't relevant. It's most business owners think their business is worth book value, assets minus liabilities. There's no one method that makes the most sense. Typically, it's going to depend on the industry, a lot of different factors specific to the company, but there's no one method that works for any company.
When I'm looking at this as an advisor, and I've collected my data, I've talked to the fiduciaries back at the office, through your office, and as well as I now have a summary statement of my strategies. I'm going out on my first time now to present this. I still have a telephone partner with you as well, right?
Absolutely.
If I need him to be online to help explain, I have a partner, whether it's through my distribution channel or it's direct from the home office.
Absolutely, and I use them all the time. I was meeting with
but in meetings you're using
Absolutely.
Yeah.
So I was in a meeting recently with an advisor, and we were going through a valuation, and the valuation came back much lower than the business owner thought. And I said, you know what? Let's have the attorney deliver the news. What went into the valuation? Why did it impact the why did it impact the value of the company? And we were able to, on the spot, kind of go through, well, what if goodwill changed from 3 to 5? How would that impact the valuation? What do you have to do to get to the next level? So we actually had a very healthy conversation of the numbers and the variables, and we came to an agreement on what we thought the typical value is going to be, and we use that as a jumping off point. So we never want to leave an advisor hanging out there by themselves.
It was a soft landing.
It was a soft landing.
It was a soft landing. Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Missed an episode? Just hop out to our site, downtobusiness.ashbrokerage.com. Want to email me? steve@downtobusiness.tv. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. We'll see you tomorrow.